Interest rates are falling. What does this mean for the Seattle real estate market? Let's talk about it. As always, I'm Bryce Greenleaf, local real estate broker here in the greater Seattle area. Love helping you guys out, all of you that reach out to me here from YouTube when you're looking to buy or sell a home. If that sounds like you, feel free to contact me at my info below. But like I said, this video, we're going to talk about the current state of the Seattle real estate market, give you the monthly update, especially with the recent news of mortgage rates starting to fall. I'm going to give you an idea of what we've looked like over the last month and what to expect moving forward with these interest rates consistently falling. All right, so first let's jump into looking at the rates specifically here, and then we will go into the market stats after that. So you can see on my screen right here, we've got the 30-year fixed rates, and we can see this trend line over the last year of where we've been, over the last 12 months and what's been happening. So you can see we really started to hit the peak of those rates at about 8% late in Q4 of last year of 2023. We saw a bit of a dip going down to the low 7s, and then it started to rise again this year. However, you can see the trend line in the recent weeks here really start to drop. So really over the last week and a half, 2 weeks, interest rates have been steadily declining. We saw a little bit of a jump back up here in the last 2 days, from about 6.3 to about 6.5. You can see that. You can see a daily movement going up and down a little bit, but this consistent trend line heading in a downward motion is fantastic news for home buyers who have been sitting on the sideline and waiting to get into the market. Now, the Fed has come out and said basically that they are going to reduce the Fed fund rate in the September meeting. And so all that is further good news that rates will continue to come down. Nobody has a crystal ball. Nobody can project exactly what's going to happen, but the expectation is rates will continue to fall through this year and likely into next year. We recently had a client that's getting quoted at just over 6%, at 6 1/8, with no buy down, no interest rate points to buy down, just at par, which is fantastic compared to where we've been really the last year and a half. So it's great news for you soon to be or current home buyers. Now, I recently shared this graphic on my Instagram here where you can see what the difference in like an 8% interest rate down to a 6.3% interest rate, what that difference in payment can be. Now, this scenario was for a $800,000 house with only 5% down payment, and you can see, you can make a pretty good sized difference in your payments, $700 to $1,000 a month, just by those drops in interest rates that we've seen since late last year. So this really starts to open up more opportunity for you home buyers that may have been sitting on the sideline waiting. Now, keep in mind, there is a flip side to this. There is a potential negative side to these interest rates coming down. While the market has been relatively friendly for buyers over the last year, meaning not as many bidding wars, a little bit more leverage to negotiate on properties and get into properties without having to deal with too much competition. If we see these interest rates continue to trend down and we start to get into the 5%, the high 5s, mid 5s, expect the market to blow up again. There's a lot of people that have been sitting on the sideline just waiting. There's a lot of pent-up demand. And if those rates get back into a number that starts with a 5, a lot of people will enter the market again. So if that trend line continues through the end of this year, expect to start next year, February, March, April, May, to explode. That would be my expectation if the rates continue to trend down. So if you are somebody that's looking to purchase a home, there might be a sweet spot here between August and December, January, before the market gets too crazy and you're still having a pretty decent interest rate right around 6%, where you can get into a home before it gets too crazy competitive like I would expect it to get early next year. Now let's take a look at the stats and see what's been happening over the last month and the year-over-year comparisons. So we'll jump in here for our current stats. You can see these are a roundup of the July stats now that we are here the first week in August. So you can see active listings here. Again, as always, we're looking at both King and Snohomish County here. So in terms of the number of total active listings on the market here in July of 2024, You can see we had just over 4,400 in King County, just under 1,400 in Snohomish County, which again, same thing as last month when we looked at this, is a healthy year-over-year jump. We are seeing a lot more options on the market than we did last year. You can see in last month's recap video, if you look at the June number of this year, in King County, we were at about 4,300, and in Snohomish County, we were at about 1,300 as well. So in King County, we saw a decent jump, just over 100 more active listings in King County from month to month, and in Snohomish County, we stayed pretty stagnant. It went up a little bit, about 41 new listings. So we have not necessarily lost any of that inventory. That inventory number, total inventory number, has stayed pretty stable month over month here. If we go down to the new listing category, this is a great number to project how we are continuing to go through this year, what the active inventory number might look like in the following months. These are the new listings that are coming on in one single month. So we have seen a little bit of a drop here in the month over month numbers. We'll look at that in a second. Year over year numbers here, we are still up from last year, which is great. Last year was a terrible year for inventory. So in King County, we went from about 2,800 to just under 3,200. Again, this 3,200 is a low number. We want it. I'd like to see a 4 in front of that, right? We want as many new options as possible for buyers to get into. So historically, it's still a low number, but we are a little bit more recovered from last year. Similar trend in Snohomish County, about 100 new listings year over year in that monthly new listing category. If we look at the month over month numbers here, flashing last month's on the screen. In June of last year, we were at just under 3,600 in King County. So we're seeing a drop off of about 400 less new listings hit the market. In Snohomish County, it was about 1,353. So again, we're seeing a good chunk of less listings hitting the market in the month over month numbers, and that is going to start this trend that I talked about in last month's video, this seasonal trend that we see. The busiest months for new inventory to hit the market are March, April, May, June, and pretty much it. Those are your 4 peak months of inventory that you're going to see through the year. As we get into July and August, a lot of people think July and August are like the busiest months of the whole year because it's the summer. It's actually not quite that way. The busiest months are those 4 months, March, April, May, and June, because a lot of people want to take care of their real estate plans before the summer hits, or they want to be moving into their home in the summertime. And so as we get into July and August, those new listings, that inventory will start to then drop off and slowly slope down through the fall and winter. So as a buyer, you know, the plus side of buying in the fall and winter is you're likely going to have less competition because there's also less buyers in the fall and winter and late summer here, as we're discussing. You're also going to have less options of homes available. So there's that trade-off there, but if you can find the right home, it can be a very good time to buy. But just know that we are starting to see that drop-off in the new inventory coming on the market, and that's just a typical seasonal drop-off. That's all it is. If we go down to pending sales and we look at the year-over-year numbers here, we are still up in those pending sales in both King, I guess just King County, and then Snohomish County has stayed pretty stagnant for the most part. Again, the King County number is not a huge jump, about 70 new pending sales in King County year over year. If we look at those month-over-month statistics, it was in June, it was just under 2,600. So we're talking about 150 less new pending sales. So again, that's starting to see this seasonal slowdown a bit. Again, less buyers coming out into the market. So if you are a buyer, that's potential opportunity for you with less buyers going in, less pending sales happening. And in Snohomish, in June of this year, it was pretty equal. It was about 7 less when it comes to the pending sales. So we've stayed pretty stagnant there. If we look at the overall closed and sold listings, King County year over year, we're still up like we would expect because this year has just been a little bit busier in general. And then same thing with Snohomish County from 879 to 930. Looking at the month over month numbers in King County in June of this year, last month, we were at about 2,200. So we're seeing a little bit of a jump, not much, about 50 new sold listings this month compared to last month. And in Snohomish County, we went down a little bit from 986 here to 930. So we're seeing a little bit of movement in both directions, nothing too extreme. As we get into months of inventory here, again, this shows us how quickly things are moving. Months of inventory just means if no new listings hit the market, how long would it take to sell out of the current inventory? So in King County, we've seen an increase in that number year over year in both King and Snohomish like we would expect. Month over month, we've stayed pretty much stagnant. King County was 1.9, Snohomish County was 1.4. So we're seeing a little bit of a jump in those months of inventory, again, indicating a little bit of that seasonal slowdown. This kind of plays off that pending sale number being a little bit lower. We're starting to get in that seasonal time here, late summer and fall, where we're going to start slowing down. The last stat we'll look at here is the median home price. Again, this is the one that most people are probably interested in. They want to see, hey, how are home prices going? So in King County, year over year, we are up $75,000 in median home values. In Snohomish County, we are up, about $60,000 in median home values. So still a healthy jump in those home prices year over year, that's for sure. So great news for people that bought last year in their equity position, gain in equity year over year. In that monthly report last year, we saw King County was $875, so we've gone up about $5,000 in median value in King County. Not a huge jump, pretty much what we would expect. In Snohomish County, it was $789 last month, so we've actually gone down a little bit, about $14,000. Now, keep in mind, we talked about this on the last video too. I believe in the last month's report in King County, we had actually dipped down a little bit in median value, and it had gone back up now this month. You can't judge a market in those median prices on a 1 month change. We can see fluctuations month to month. We want to look at a 3 or 4 month trend to really see where those prices are going. Again, it is not uncommon to see a little bit of a fluctuation in those prices, whether that's a little bit positive, a little bit negative. We want to see that trend line and which way it's going. This drop in Snohomish County is not something that I would think is going to drop prices. Again, the season can factor into a slight drop in prices month to month without indicating anything more than that. It's not indicating a real estate crash or prices crashing. These stats and these prices were based on rates in the 7% range and plus. We're a month lagging here. Now we're in August. Now this is when we've started to see the interest rates coming down. So it'll be very curious and good to see what those numbers are going to look like in when we do this video a month from now. The August recap numbers, I would expect those prices to be starting to go back up a little bit, and they'll jump back up. I don't think it's going to be anything extreme quite yet. Again, seasonal slowdown, but with those rates coming down into the low sixes, we are going to start to see more activity on the market than maybe we saw last month. So just keep that in mind. It's not really indicative of anything crazy happening with a little bit of a drop in prices like that, but let's keep an eye on that trend line. But overall, the market is going through its typical seasonal slowdown, which we didn't really get in those COVID years. There was no seasonal slowdowns. It was madness 12 months out of the year, but we're getting back to a little bit more of that normal market. Again, inventory is lower than we want it, but when so many homeowners have a 3% mortgage on their home because they all refied when rates were so low, a lot of people don't want to sell. So as we start to see those rates coming lower and lower, and if it gets into the fives here soon over the next 2 to 6 months, whatever that looks like, expect more homeowners starting to get more comfortable with making that move, with trading up and getting into a bigger home for their family, or downsizing as their kids have moved out, and they're getting more comfortable with making that move, which should increase our inventory number a good amount. So we'll keep an eye on that and how things go. Hopefully this was insightful and helpful for you if you are looking to enter the market. As always, happy to help you out. If you're here in the local Seattle area, or you're relocating here from out of state and you need help with your real estate plans, feel free to reach out to me. I would be more than happy to help. Thanks for watching this one. I'll see you on next month's market update.